Please read this disclaimer carefully before proceeding further. Welcome everyone to the analysis of gold XAUUSD. My name is Vic. Thanks for joining me here. Let's quickly see what has been happening on gold and what kind of opportunities are available. Before we proceed further, please make sure that you support this free analysis and subscribe to the channel and put in a comment if you like if you have any questions or if you find this useful. Please let me know by putting a comment and share it with other traders and trading communities. That will be very helpful. Your support is very essential to keep these sort of analysis coming in. I've already posted analysis of DXY on here TradingView and as well as on YouTube and LinkedIn. So check that out because that is also very important. Irrespective of whether you are trading dollar or not, everything is kind of related to dollar. So it is very essential that we keep an eye on that. Okay, so let's start with the higher time frame. What we have on gold. So I have already mentioned it several times in past that what we have on gold is actually something like this. We have a W pattern here, and then we have another W pattern here, and when W pattern completes, the market falls down. That's why this has been falling. You can go and check out the previous analysis if you want to see what actually happened here, because this is where we were looking for short positions. Let me show you the higher time frame. So higher time frame analysis was like this. We already had this planned. So there was a W pattern here, and there was another one here, and this was posted several months ago. So higher time frame pattern is actually working out on gold very nicely. And what we have right now is actually it is reacting to one of these trend lines. We'll come to that, but let's go back to our structure, higher time frame structure, and then we'll take it from there. So what we have is actually a W pattern here, and the market is falling because of that. And when W pattern completes, the market falls. After that, we usually get a kind of M pattern here. So this can actually lead to an M pattern. But what we have is actually a midpoint here around 1680. So if 1680, which has already been tested twice or thrice, if that is broken, then we are looking for further down into movement into 1600 or even 1500s. Okay, there is a level here which is very very important. This is a very important level here. Which is approximately 1578 1570 something level here, near about 1600 or so. So market can actually fall there, but it may take weeks, months, even years before it can happen. So this is what we have on monthly. Let's go to the weekly time frame. On weekly time frame, what we have is the same W pattern which we just talked about. So we have this W pattern, and when the market completes the W pattern, it falls. Now it is falling where? It is falling into a level which has several of these trend lines here. So there are a couple of trend lines here, and then there is a trend line here at the top as well. So the market was here, and in the middle of all that, so those trend lines are actually supporting the price, and at the same time in the middle of that we also have an M pattern here, and when M pattern completes, the market goes up. Now this M pattern is a kind of weird one because it actually does not finish where it is showing that the market has finished the M pattern. It does not actually finish there. Usually this M pattern goes extended. So there is still a possibility that gold can fall down. But because there are a few factors here which are supporting the price, that's why it is going up. Okay, we'll see those factors in a second. But if we just talk about this structure here, there is an M pattern here and the market has started to go up. So if that is the case, then there are few levels here which it can reach. So we'll talk about that in terms of bullish scenario. If the market starts to go up, then what are those target levels which we target as profit targets, and we can also look at them kind of resistance levels. Okay, now, if the market starts to go down, then there are certain levels which can act as support and profit targets. As a trader, you should be analyzing all sorts of scenarios because you can play. You can play with those scenarios. If the market starts to go up, you can execute according to that. If the market starts to go down, you can execute according to that. All you need is basically where are potential support and resistances, where are the next levels which are important in price action. Okay, so let's bring in the latest analysis. So if I switch this on. I've already marked those analysis using the FCP strategy. So what we have is, let's talk about this bullish structure here first. So the market has come to this FCP zone, which is not a very powerful FCP zone. That is why there is a still possibility that it can fall down. But why it is bullish right now is because of this. There is a trend line here. There is another trend line here, and these are both trend lines which were like already mapped out here. So if you pay attention to this trend line which was already there, right? So this trend line, it has supported the price. There was a kind of like wedge sort of thing. The market fell through that. Now it is going back inside and it is touching the upper line of that wedge. I'm not sure whether you can actually clearly see that, but that is the wedge sort of like, this is a triangle sort of thing. So the market fell through it. Now it is going back inside, and probably it will go like this and fall down or go back up. So we'll have to see where which way it actually like goes, in what direction it goes. Let's come back to this. So if the market, sorry, this is the wrong chart. Let me take this one. So these are the trend lines which are supporting the price, and that's why it is going up along with an FCP zone here. There was a minor gap available around 1807 or so, and that's why it is there. Now, if you have been following my analysis for a while, now you remember what was the importance of 1806. The market came back into 1806 level here, which has been acting as very good kind of price pivot point for months. So if you go back and look at my analysis for past few months, you will see that before this huge move came up, market kept on revolving around 1806, and this is where it came back again. So near about where we are right now is 1806. So that's kind of an average pivot sort of thing, right? So the market came back here and it started to go up. Now what we have is, this is the trend line, which was kind of broken last week. So we are looking at the daily time frame. If I look at the weekly time frame, this is still not broken. But if I look at the daily time frame, it is broken. But we have not got a confirmation to the upside. This candle has finished inside the previous candle, so that is not a good confirmation. However, if the market starts to go up, then the next level is going to be 1853.586. Near about that, this is very important level, because if the market touches this and you get a strong rejection from this, that will be a kind of a better confirmation for a short, because the market can come back down either to test this trend line or to this FCP zone. But I will personally be looking for, if that happens, actually I will personally be looking for further long term short opportunities in gold. So this level here, 1853.586, is a very important one. Next one is also very important, which is 1867 here, because of the structure level, we have actually a W pattern inside, which can actually go somewhere there. So if you're looking for short positions, then these levels can act as your resistance. However, if you're looking for long, then these resistance can also act as your profit targets. Now, there is a gap available around 1884 290. Now you know that gold never leaves any kinds of gaps open, so at some point in time gold is going to come there and close that gap. Now it doesn't matter, we do not know whether that's going to happen today, tomorrow, this week, next week, or next month, or next year, or in few years, who knows. Okay, but you should be aware that there is a gap available at 1884.29, and similar sort of gap is available around 1906 as well. Okay, so these are the levels here. Let's look at them one by one. So 1853.586, 1867.506, 1884, 1895.346, 1906, and then we have 1929. Okay, so once it has gone 1920, if it has gone beyond 1929, then there will be a strong possibility of it actually going to all-time high. But until then, trade one level at a time. So if you're long, then you should take your position, you should take your profits at these levels and wait for further confirmation. So one step at a time, take profit. If I go long, take profit at this level. If I go long, take profit at this level. If I go long, take profit at the next level. So this is how you should be trading, because at any of these levels the market will have the potential to fall back down. Hence these can also act as your levels for short entries. Okay, now if we talk about The bearish scenario, if the market actually breaks through this trend line, so there is still a long way, before it actually breaks through that. What I'm expecting is that, even before it actually breaks through these lines on bearish side, it may actually consolidate here for a while around 1806, as it has been doing for some time. It consolidated, came back. Even if it went further away from 1806, it kept on coming back to 1806 or level. So okay, so it is, don't be surprised if it just consolidates here for some time on the bearish side of things. So if it does, if it starts to fall, then and if we clear this area, then we have the next target as, let me put a line here. So this FCP zone starts around 1755.9, and the next FCP zone starts around 1704. And after that, what we have is, so all of these FCP zones and all of these levels can act as support, so market will have potential to go back up. So remember that all of these levels can act as support and resistance depending on in which direction you're coming from. Okay, so these are the levels here. Okay, you can actually look at this chart, or I will post this chart in our Telegram group, which is, by the way, free. You're free to join that. You'll find a link to that in the description of this video. Okay, so this is what we have here. Let's look at Vata and Visage. On Vata and Visage, what happened here is that market gave us very good short signal here. Actually, short aggressive short signal came here. Um, on the color change here, and the market started to fall. But this was non-aggressive. This was actually an arrow which told us that market was going to fall down. The first target was on the touch of the water curve, okay, which was reached, and it reached the profit target very nicely. This move was near about $200 on gold. Okay, you should check out the analysis from like last 2 or 3 weeks ago, right? This is where we were expecting market to fall from near about there to this level here. So the market came here. Now it started to go back up. Why? Because it has crossed the water curve. When it crosses the water curve with the momentum, usually it goes back up to retest it. So right now it is stuck in water curve here. Okay, it has not been able to close above. That is why it is still, there is still chance that market can still fall down. However, if the market opens higher, or if it starts to go up, then it can try to go and test this water wave on gold, a weekly time frame. So if I put a line here, approximately this is where it is, 1863 or so. Okay, right now this water curve is around 1845. Okay, if I go to the daily time frame, on daily time frame, this is the WM pattern that we were talking about. On daily time frame, this candle has not closed above this, so it is still not very good indication that market wants to go higher. But if it continues to go higher, then we have got an open target of 1878, and after that we will have this water curve acting as resistance. But what you have is that water trend has actually changed the color to red. So these are the water targets that we have. So these are the levels here on water curve, and let's go back to our analysis here. So the plan is basically, monitor how the gold is going to open. If it starts to go up, then you should be very very careful around 1853 586, around this level here. There is very important. Why this level is more important is because you will see that this is actually a Fibonacci level, and it also has potential to push the market down. This is also a previous structure level here. The next level is also a Fibonacci level, and that is also a structure level here. So what can happen is that market can actually create something like this. It may or may not be head and shoulders like this. It may be a little bit higher as well, but you should look at the previous structure here as well. On here, all of these levels are very good confluences of structure levels as well. So you should pay attention to, when the gold starts to move. If gold starts to move, then pay very good attention to all of these levels. Okay, and trade based on that direction. Okay, so this is what we have on gold. If you enjoyed this analysis, make sure to hit the like button, subscribe to the channel, and share it with other traders and trading communities, because your support is absolutely essential to keep these analysis coming in. Right. So I'll see you in the next one. Have a great trading week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.